Good afternoon, guys. Let's start on with the third week trade analysis of the month August. So, coming to the third week, guys, you can see that in a daily time frame here, what you can see here was that the market showed some kind of bearish momentum, and after sweeping out this low, guys, you can see the market swept this low and the previous low over here. You can see this low over here. Sweeping this low, the market swept this low and closed between this range, guys. So whenever the market sweeps this low and close within this range, the market sentiment is always bullish. So if you look into sweep over here, you can see this was the previous low where the origin of the impulsive, you can see a huge aggressive buying over here. So after this, the market there might be a lot of buyers who might have entered here seeing this kind of huge aggressive momentum. A lot of buyers might have expected that the market after this huge aggressive momentum, market consolidated like this. So market might come to these fib levels and continue further bullish like this. But what happened is that instead the market took out all those buyers random buyers who might have entered here, who might have taken long positions over here. Uh, so with this one single momentum, guys, the market took out all those buyers here and you can see after that the market showed some kind of bullish momentum, and in case of a 5 minute time frame over here you see the aggressive selling towards the downside followed by aggressive buying, the v-shaped recovery over here, and again the market retraced till these levels over here but failed to sweep below this level. Instead it broke structure towards the upside, and again, the market retraced to these levels over here and took again support over this demand and continued further. And you can see further the next day the market gapped up and continued further bullish momentum towards the upside. So let's break down trade analysis day by day, guys. You can see what happened here. So let's take this out over here. So what usually I do is to mark the mid of the first candle as well as the 5 minute zones below here. So this is the Monday trade analysis. And Friday, last week, on the second week, I have already explained in my previous video. You can go through that video. But what happened is that as my trade bias is what might have already told you is that in case if the market gaps down, I look for flat open and gap down. I will always look for downside. But in case if the market gaps up, my sentiment would be bullish. So what happened here is that you can see the market flat open and showed a huge bearish candle over here. So what I usually do is to mark the mid of the first candle, and in case if the price is trading below the mid of the first candle is where I always look for downside. And another thing is that if you can see here, the market showed some kind of rejection over here and showed some kind of bullish momentum. And market failed to close below these levels, guys. And I have taken long position here. So let me explain to you where did I take long position. So what you can see here is that the market showed aggressive momentum towards the downside and showed a huge bearish candle. But here what happened is that the market swept this low over here and closed bullish. But in case what would I would have definitely taken a short position in case if the market would have closed below this level over here. This is the low. This is where the support sweeping this low and closing bullish hedge. This is where the demand has taken place. So in case if the market after retracing these levels and the market would have closed below these levels, so that's when I would have taken short position on this retracement. In case if this momentum towards the downside was if this momentum towards the downside was um, bearish with displacement like fair value gaps and stuff like that. So this momentum towards the downside, in case if it would have been aggressively selling towards the downside with fair value gaps, definitely I would have taken it towards the short side. So in case if another bearish candle like that would have happened and closed below this line over here, that's when I would have taken bearish setup. But what happened is that again the market retraced to these levels. Again the market showed some sort of rejection and closed above this line. So after seeing this guys, that's when I my bias changed from bullish to bearish. from bearish to bullish. So initially, after seeing some huge aggressive candle, my initial bias was bearish. But after seeing this market showing some aggressive displacement towards the upside, that's when I thought of taking just trade towards the upside and plotting this fair value gap. And I expected the market to come uh, towards this demand over here and showing some sort of green candle. That's when I thought of taking a long position. So what did I do is that definitely around this point, somewhere around this level, when the market tapped this fair value gap nowadays, you can see the point of interest which I have mentioned here and showed some kind of rejection over here. So that's when have taken long position over here. So this is where I'm keeping my stop loss just below this candle also. So that's when I entered long position, and this was the 5 minute mid of the first candle. So around these levels is where I exited. Guys. It was one of the short trades which I have taken. But you can see after this, what happened is that the market showed some kind of aggressive displacement, bearishness over here. So this is one trade, guys. But what you can see here is that there is no imbalance over here. The only imbalance where you can find out here is that this is the only imbalance where you can see. So in case if the market would sentiment would have been bullish, right, the market would have retraced to these levels and took support from this demand over here. So this was another demand, the last down boom before it broke structure towards the upside. It's fair value gap, taken support from this here and continued further bullish towards the upside. So it might have broken this high and continued further bullish. But what happened is that the market showed some kind of bearish sentiment here, bearishness over here, and you can see the market showed some bearishness over here, and you can consider this to be a retracement itself. So whatever the momentum took place from here to here is all the bearishness over here. That's the what you call is the retracement levels after the aggressive momentum towards the upside. You can consider this to be an retracement over here. But what happened is that you can see there is an equal low liquidity over here. So in case if the market sentiment again would have been bullish, guys, what would have happened is that the market would have set this swings over here, this equal low liquidity. You can see this kind of liquidity over here. So what would have happened is that the market would have definitely swept uh, swept this low, immediately closed above this range and continued further bullish towards the upside, sweeping this liquidity above here and continuing further bullish towards the upside. But instead of happening price behaving in that way, guys, what happened is that the market over here, you can see the market over here swept these previous highs over here and showed some aggressive displacement towards the downside with breaking the structures here, guys. You can see a clear break of structures over here. So this is a huge aggressive displacement towards the downside. And what happened is that you can consider this whole sweep as a single move. So the moment when it broke these levels, guys, that's when you could have easily taken short position, finding out the fib levels, the common point within this to the high and low of this candle. And the 0.38 level or the mitigation block is where you could have easily considered this zone over here. Once the price taps these levels, that's when you could have easily consider it to be downward momentum, or you can consider this fair value gap over here. You can see the market came mitigated this fair value gap and continued further bearishness towards the downside. And for target levels, usually you could have plotted the fib retracement levels of here, the counter from this to the common point in this. So usually you could have targeted it all the way to 2.6 levels or 3.2, 3.618 levels. So or the 1.6 level. So the if case of liquidity levels, definitely this was the ideal exit you could have easily taken. So this is the sell side liquidity. So this was another best trade you could have easily taken towards this short trade okay, keeping your stop loss just above that candle and targeting it to all the way towards the downside. So this was one good opportunity for you to take short entry, guys. So this was only two trades. I have not captured this momentum because I usually think that okay, I would like to capture it below between 10 or 10:30, guys. You can see at 10:30 the market momentum entirely is completed over here, but I could have easily captured in case if I would have sat in front of the monitor. But yeah, after capturing this momentum, that's when I exited my position. So seeing this rejection candle out here and closing bearish. That's when I exited, making a minor profit only. But this after you can see guys, this momentum, this was huge momentum. Uh, what happened here is that the market sweeping this low here and aggressive displacement towards the upside. You can see with fair value gap. Again, the market came, mitigated this fair value gap over here. You can see and closing above this candle. Once this price closed above this candle, right, that's when you could have easily taken long position. So this is another break of structure. So this is one of break of structure, and another break of structure is this over here. You can see this market with displacement over here. Once after breaking this candle, that's when you could have taken long position in case if you would have your sentiment would have been biased, taking your stop loss just above that candle and targeting all the way to this liquidity levels over here. So this was one crazy trade opportunity, the 1.68 level, or in case target levels in case of fib retracement levels, the common point within this to the common point between this to the common point between this. So you can see 1.68 level, 2.68 level, or another fib retracement you could have taken was this over here. So this is one retracement you could have taken. So this was another trade opportunity where you could have targeting the 1.68 level. So um, that's how you could have easily taken trade, guys. Uh, This was one trade opportunity that you could have taken, keeping your stop loss below this candle. So this momentum is very aggressive, guys. You can see there is a one directional momentum. Definitely, you could have captured in case if you could have taken long position. But yeah, you could have just tried your stop losses. Once the price closed below the 21 moving averages, that's when you could have exited your position. You can see once that we had 21 moving average support over here, and you can see how that market is trading above the 9 moving average itself, showing that the market sentiment is very bullish, taking support from 9 moving average and continuing further towards the upside. So this was one trade opportunity, guys, where you could have easily taken. Um, this is on Mondays, right? And coming to Tuesday, uh, but VWAP confluence is one thing. So let me plot the VWAP over here. You can see the short trade over here where the market showed aggressive momentum, and another where the market closed above this level. I told you once it closes above this level, that's when you could have taken long position. So after the market retraced and again it closed above these levels, is another trade opportunity where you could have taken towards the upside. So this is one trade opportunity, guys. So coming to Tuesday. Tuesday, what you can see here is that as Tuesday is an expiry date, so definitely you can expect some sort of manipulation in market. Uh, so what happened here is that definitely after yesterday's huge bullish momentum, right? So what you can expect is that in case if the market sentiment is aggressively very bullish, the market again would have gapped up, showed some sort of retracement and continued further bullish towards the upside. But to target all those random buyers who might have entered, taking this long position over here, expecting the market to go further towards the upside, to target all those buyers because after seeing this kind of huge bullish momentum, guys, there is no liquidity because there may not be any sellers who might have entered this market. You cannot sell it over here. You cannot expect like retail traders to sell over here, guys, because after seeing this huge aggressive buying pressure over here, uh, there is no chance that the retail traders would definitely buy over here because they would get trapped over here. So to target all those buyers who might have entered here along this way, the market gapped down, and as it was an expiry day, so it could have shown some sort of selling pressure. So as per our trade analysis, let's discuss, guys. So this is the bullish candle over here. So what you could do is to always plot the mid of the first candle. So you can see plot the first of mid of the first candle over here. And what you can see here is that in case you can see this is the pivot levels and the mid of the first candle and the 5 minute zone as well. So in case if the market sentiment here would have been bullish, guys, the after this kind of market taking down liquidity over these levels showed a good solid bullish candle. So a lot of buyers, the market again retraced and In case if the market would have been bullish, the market would have taken support from this level size. This is where the market would usually taken support in case if the market sentiment would have been bullish around 57,500 levels and continued further bullish over here. But instead, what happened is that the market further continued selling towards the downside and even reaching all the way to this demand zone over here. So what I have plotted is that in once the market closes above this level is where I would have consider it taking bullish long trades, but definitely the market didn't happen over here. So what happened here is that see, you can see the market again broke these levels, the pivot levels, the middle of the first candle, and even the VWAP level as well. In case if you plot the VWAP level, you can see it's aggressively breaking towards the downside over here. So this was one zone, guys. If 57,500 levels is where you could have expected the market to reject price and continue further bullish, but instead the market aggressively broken towards the downside. A lot of buyers might have entered here at this position, expecting the market to continue further bullish. To target all those buyers, again, the market showed some aggressive selling towards the downside. And what you can see here is that after finally the market sweeping this low and showing some sort of bullish momentum, but immediately it's followed by a huge engulfing bearish candle. So after plotting this, seeing this candle, you could have definitely taken short position over here. Or what you can see is that again the market sweeping came all the way to this lows over here, took liquidity and showed some sort of bullish momentum, but immediately followed some sort of rejection. And you can see this is where the market showed aggressive downward momentum. And what happened here is that you can see the market sweeping this high over here with a huge bullish candle over here. But in case if again the market took support over here and showed some kind of bullish momentum, retraced and should have continued further bullish like this, guys. This another bullish candle over here, another bullish candle over here. In case if the market sentiment would have been bullish, but what happened is that the market clearly broke towards this low over here. You can see clearly broke this support down support over here. So again, along with breakout structure over here, you can see this is a clear breakout structure where the market aggressively broke towards the downside. So what you could have plotted is that looking at the fib levels over here, so the common point within this to the common point within this, you can see the mid of the 50 levels, or you can use this candle over here. So once the market retraced back to this candle levels, that's when you could have easily taken short position and continued further bullish to bearish towards the downside. And for target levels, the common point within this, to the common point within this, to the common point within this. So 100 levels is one exit, and another exit is definitely the 1.68 level is what the ideal exit levels is. Right? 1.68 is the best exit level, right? Um, so this was one trade opportunity where you could have taken. And for projection levels, definitely you could have considered this huge candle over here, the common point between this to the common point between this. So if you do the projection levels over here, so this was ideal exit levels over here, where you could have easily exited your short position. So in case short entry over here, keeping your stop loss just above this candle and targeting it all the way to 1. This was an ideal trade where you could have easily taken. Um, you see, guys, again, you can see the market. You can consider this. This is 1.68 level. What you can see is that after this kind of huge aggressive displacement, the market sweeping this low and showing upward bullish momentum towards, you can see aggressive buying pressure. And again, the market retraced levels. You can consider this 50 levels and continue further trading towards upside. So this was only one trade opportunity, guys. This is on Tuesday. As it is an expiry day, you can expect a lot of premium decay around these levels. So to um, the premium decay, you can definitely expect. Coming to Wednesday, guys. On Wednesday, what happened is that you can see um, this was one day where I had made some profit over here. Uh, so you can see the market. I told like in case if the market gaps up, guys, my sentiment after seeing this sweeping liquidity showing aggressive displacement, retracing back and continued further bullish. So in case if the market gap would have gapped up, I would have definitely showed some kind of buying momentum. So I would have taken long position. But in case the market shows flat to down entry, definitely my bias would have been bearish. So what you could see is to plot the first candles, mid of the first candle. So in case if you plot these levels and mark the 0.58 levels, so this is the mid of the first candle. What you can see is that the market showing some sort of huge bearish momentum over here. So what I could see is that what I would have expected is that um, the market swept some low over here. You can see the market swept this low over here, and after sweeping this low, you can see followed by an aggressive bullish candle over here, where a lot of buyers might have definitely entered this position, as you can see, expecting that the market would have continued further bullish towards the upside. But what happened here is that the market again, after this aggressive buying pressure, rejected price from these VWAP levels and continued bearishness over here. So where did I take short position is definitely along this candle. And what I expected is that to keep my stop loss just above that candle over here. And for target levels, what did I do is to use this projection levels, guys. The candle, the green color candle projection levels is where I definitely thought of using it. So if I mark the projection levels over here, so projection levels over here. So the candle over here to the candle over here. So this is where I have taken trade guys on Wednesday and I made a decent for this was the projection level. So what you can see projection levels over here. The 0 point minus 2 to minus 2.5 levels is where I exited, taken short position. Keeping my stop loss just above that candle itself only and targeting it all the way to this level. So this is where I exited. This was one good trade where I have taken it towards the downside. But immediately you can see after that the market showed some kind of bullish momentum. And definitely after seeing this sort of bullishness, definitely once the market closed these levels, you could have easily taken long position over here, keeping your stop loss just below this candle itself and targeting it towards this fair value gap for the mid of the first candle. So this was one trade opportunity where you could have taken. I have not captured this momentum, guys. After capturing this momentum, I made a decent profit, and that's when I exited my position. And after this, you can see the market showing some sort of momentum, sideways momentum. But what you can see here is, guys, one thing I need to keep in mind. I have to tell you is that you can see after this, the market aggressively broke towards the upside. Again, the market retraced to the discount levels and again showed some sort of bullish momentum. But what happened is that the market again further came all the way to this demand levels over here. You can see the order block level over here. This is the last down move over here before the market moved towards the upside. So you can consider this to be the 1 minute order block level. Came all the way to 1 minute order block level and showed further bullish momentum. So this was a sell side liquidity. So you could have definitely taken another short position after seeing this kind of rejection and towards the downside, and you could have captured this momentum. That's a huge aggressive momentum towards the upside. So this was one trade opportunity where you could have taken towards the upside. So here you could have taken keeping your stop loss just below this candle and targeting it all the way towards the upside like this. And you could have just tried your stop losses based on this. So this was one trade opportunity, guys, where you could have easily taken. But I would definitely teach you mainly is to focus on morning momentum trades. I don't want you to sit throughout the day in front of the charts and trying to find out trades where you could have taken and take wrong trades and make wrong decisions and definitely lose money. Just focus on 1 or 2 trades a day, guys, and you're done. And the amount of money you could have easily made in this 1 or 2 trades is enough. Okay, so this is what I would like to tell. Um, just focus on 1 or 2 trades. Okay, so this is on Wednesday. And coming to Thursday, you can see after this kind of where the market mitigated this order block level, showed some kind of bullish momentum. And on the next day, the market showed a huge gap up on this day, on especially on Thursday. And you can see what happened here is that um, since Thursday is an expiry day, you can see the market gapped up over here. And coming to price action over here on Thursday, and Thursday is an expiry day also. So let's focus mainly what's happening on Thursday over here. You can see what we have to do is to plot the mid of the first candle. Okay? So if you consider the low to high of this candle, and if you consider the zero point 0.5 levels and plot the zero point 0.5 levels, okay? And along with 5 minute zone as well, you can see the market failed to sweep this high and closed bearish over here. You can see it's kind of consolidation, huge bearish candle over here. So what happened is that again the market retraced and aggressively broke towards the downside. But immediately after breaking this low, guys, it followed by an aggressive momentum towards the upside and closing price above this levels over here. Whenever the market gaps a price, don't take aggressively towards the downside. Confirm and take towards the upside. So what I would have taken a long position. I would have definitely taken a short position once the market would have closed below this level. Guys. So once the market broke these levels, I would have taken it on the retracement and continue expecting the market to continue all the way towards the downside. But you can see this is the last opening price over here. The market came all the way to this opening price, took support and showed some sort of bullish momentum, and price closed above this last bearish candle over here. And you can see again the market retraced over here towards this discount levels over here. And in case if you try to plot the VWAP level over here, you can see the market retraced and showed some kind of bullish momentum and continue further. So and for target levels, you could have used the compound within this, to the common point within this, and to the common point within this. As I have already mentioned to you, 1.68 level is the perfect exit opportunity where you could have easily taken a trade. So long position over here, somewhere around here, you could have easily taken, keeping your stop loss just and targeting it all the way to 1.68. So this was one good and crazy trade opportunity where you could have taken. You should always have two biases, guys. In case if the market breaks this level, I take short position. In case the market breaks above that level, I would take long position. You should not be just confined to one particular direction. That I would always take. I'll definitely take the short position. You should always have biased opinions. Um, if the price breaks below these levels, I would take a long position and short position in case if the breaks above that level. Early on such momentums, definitely you would make some sort of money. So this was one trade opportunity where you could have easily captured and end your day. So this was on Thursday, guys. So this is only that morning trade where you have captured. So another thing which I would like to explain to you here is that since it's an expiry day, what you can expect is that the market sentiment is bullish only, but as it is an expiry day, you can expect some sort of manipulation. So usually on expiry days, what happened is that market, even if it gaps up, guys, shows some sort of sweep of liquidity over here and continue further selling towards the downside. You can expect downward momentum. So that's why I was quite biased, like whether I should take short trade or long trade. But you can see clearly, guys, after this kind of huge bearish candle, breaking the VWAP, as well as mid of the first candle and closing below this candle. Again, the market retraced. We rejected price from these levels and continued further bullish, but failed to close below this close price, and immediately showing an aggressive bullish momentum. And you can see further the market retraced back to these levels, took support here and continued further bullish. So here the clear price action is bullish only. Even if it's expiry day, definitely you could have taken long position. But in case if you could have taken short position, you have exited this position once it broke towards this level. That's when you could have easily exited. Your stop losses should be very confined, guys. You should be very strict on your stop loss. Once if the market breaks that level, that's when you should exit your trades, no matter what, guys. And what happened on Thursday? On Friday, guys. This is the last day. So what happened on Friday? Definitely, it's not actually a great day, guys. What you can see here is that you can see the market gapped up here. So and show some sort of bullish candle over here. So what you can plot is to plot the mid of the first candle and 5 minute zone in case. So if you consider this is the 5 minute zone, you can consider this zone as 5 minute over here. The pivot levels. What happened here is that the market shows some sort of bearishness and retraced right and aggressively broke towards the downside. You can see here the market clearly broke towards the downside. In case As on Friday, guys, it was Vara Mahalakshmi, so I didn't take any trade, guys, because I was on journey. So definitely, if I would have taken, I would have lost money because after seeing this kind of huge bearish candle and it's breaking this low over here, the last support over here, I would have definitely taken a short position over here, closing price, keeping my stop loss above this candle itself and targeting it all the way towards the downside. Or I would have retraced to this fair value gap, expecting the market to continue further bearish. That's when I would have taken short position, guys. But after once the market closed above these levels, is when I would have easily exited. You can see my stop loss is just as low as only one candle of stop loss, right? So if would have broken these levels, I would have easily exited this position and consider it as another break of structure, and I would have taken long position on this retracement of these candles over here. So definitely I would have taken long position over here and expecting that the market would continue further, seeing this bullish engulfing candle over here, so taking displacement and targeting it towards the upside. So in case if you try to plot the fib extension levels, the compound in this to the common point within this, so you can see clearly the 1.68 level is where I've had usually exited my position. So this is where I've usually exited this position. See? Done, guys. So I'm done for that day. And Friday, you could have easily captured this momentum. It's not just one can 100, it's 159 points, guys. So usually in premiums, you can capture 80 to 90 points here. It's not just one 10 points or 12 points. You can see 100 momentum points over here. This was another 100 momentum points over here. You can see 140 to 150 points in momentum over here and another 148 points momentum over here and early movement momentum. You can see 100 momentum points over here. It's not just 1 or 2 points, guys. So this is the trade analysis of Monday, Tuesday, Wednesday, Thursday, and Friday. So what you can see on a daily time frame, guys, what you can see it stages off and consider what is happening over here. You can see the market show some huge bullish momentum over here. So definitely my bias would be definitely bullish. So expecting that the market will continue further bullish over here, breaking these highs and continue further bullish, guys. So I'll be definitely looking for long trades only. As of now, I'm not looking for any short trades. And in case if you consider even the VWAP levels or moving averages levels, you can see clearly the price took support over this 100 moving average over here, and another is the 21 moving average support over here. The in a 1 minute, 1 day time frame, you can see rejection of price from these levels and continuing further bullish. So there's high chance that the market on Monday might gap up and continue further bullish, guys. So my definitely my bias is on bullish side only, and I'll be taking trades in the next week. Mostly on normal days, other than expiry days, I'll be taking on the CE side, and in case if it's on PE side, definitely if there is any sort of manipulation, so I will definitely take short trades, right? So this is my trade analysis for in the month of August, guys. So hope you like it. Um, and I'll be coming back to the fourth week trade analysis next week as well, and be in touch, guys. Thank you.